Alrighty, ladies and gentlemen, welcome back to the Rip Drip Pod. Today we have a very special guest. We have Sam Sauter. He has been in the space for many years now, spent millions of dollars on Meta, different ad platforms, worked with some of the biggest influencers or people in the info space over the past couple of years. And so we're excited to pick his brain and see what his journey has been like so far, different insights that he has when it comes to, how to run ad campaigns, how to scale, how to build sales teams, work with high caliber clients, manage those kind of expectations. And I think this will be very helpful for anybody that's selling an info product or a coaching program or anything like that. But Sam, welcome to the podcast, brother. Great to have you.
Yeah, thanks for having me, guys. Excited to be here.
Excited to have you on, man. Can you dive first and just catch us up to speed? Like, how did you even get into the space? What was that journey like? And then how did you get to where you're at now, working with people that you're working with now?
Yeah, so I was really fortunate. I was a college athlete, broke college athlete. I wanted to be a professional tennis player, and that was like my purpose, my dream from like 16 to 22 years old. That's all I thought about. I started kind of realizing around my junior, senior year of college that I maybe wasn't going to make it as a pro, and I was trying to make money to keep playing and funding that tournament. And I got injured my sophomore year, and my just by random happenstance, I got paired by with a roommate who started MediaBuyer.com out of our college dorm room. And it started off, it's like, he was making $2,500 a month selling plumbers on their Google search ads. Like in our first year, it was like he was doing hundreds of outbound calls a day, and I got to watch him build that business. He invested in, Cole Gordon's mastermind, Alex Becker's, Sam Ovens. We were inside all of those programs trying to learn it. And then when I got injured, I was like, I need something to do, and picked up a book on internet marketing. I spent 16 weeks, straight of that summer while I was supposed to be competing, just glued in front of my laptop, going through every single course that he had bought and started kind of watch him build that agency. So then by the end of that fourth year mark, he was working with some big accounts, and he was going to go off in that direction and keep growing it. I got an offer at the beginning of 2020 to go in-house to be a marketer at a $25 billion investment fund. It was a really interesting firm. There was like 100 smart people there that had worked on Wall Street, Goldman Sachs, Merrill Lynch, Morgan Stanley. And I was kind of this weird social media influencer kid who understood digital marketing that they knew that they needed to do, but they were investment people, right? So I had to become a licensed financial advisor to work at the company, spent the first year doing that. And then we started running their campaigns to go after ultra high net worth investors. And that ended up being really fun because I got to kind of sit C-suite adjacent to the founders there, learned a lot about investments, and a lot of great fund managers and alternative investment managers would come pitch us there at that fund. So I get to learn a lot about investing, finance. I was the appointment setter there for many years as well too. So I got to learn that piece. I started learning about CRMs, lead gen across multiple platforms. And right around that time, the company actually invested me to be in Jeremy Haynes's mastermind for the first time. That was like it was actually a super funny story. I called my friend Brian Mancata at the time, who was running adspin.com. And I said, hey, I just got this job. I'm trying to do a better job. Can you introduce me to somebody who can coach me at my job? And I met Jeremy. And you know how you get that feeling, you speak to somebody in like a couple minutes and you're like, okay, this is going to be my guy. Like you just have this feeling. And so I pitched Jeremy to the company. Imagine there are all these like kind of stuffy corporate finance, corporate people. And I'm telling him how amazing this is. I'm like, this guy's raising millions of dollars a month. We're going to learn all this stuff. We're going to make all this money. I was so eager and I was so excited. And Jeremy shows up to the meeting, and there was like a cultural mismatch a little bit. So there was like 20 senior partners of this financial firm in suit and tie. And Jeremy had this big flashing green sign behind him that said, get richer. And I got on the Zoom call. And so it was like the info world kind of colliding with like traditional financial services. And they said, look, I don't know if we can pay Jeremy like 20 grand a month, but he has this little inner circle at the time. Now it's 10 grand a month. At the time, it was like $1,500 a month. And it was like 20 of us that would just kind of sit on his couch and kind of go back and forth and learn from each other. And it was now if you're I'm still in the mastermind now. And there's hundreds of people there, and it's pretty it's $10,000. It would take us 10 years to get through everybody's there. But in the beginning, that first year, it was kind of 10, 20 people just going around the couch saying, here's my constraint, here's my revenue, here's my offer. What do you guys recommend? And we'd all give our opinion. And I was making 110 grand a year, maybe 100 grand a year as a media buyer in-house. And I was meeting young kids making 40 grand a month, their Cairo agency, or 150K a month, their roofing agency. I'm like, that seemed crazy to me. And that kind of opened me up into the info space. And then from there, just kind of like after I started, working and freelancing and stuff like that, just through a random happenstance, I paid for a consultation with Tai Lopez, and I was kind of trying to have him help me navigate he had this special. It was like you could pay a few $1,000s for like a 15-minute call. It was a lot of money for me at the time, but I was like, I wanted this consult on a change of direction. And this is another funny story. Maybe it's a little bit long-winded, but kind of right around the tail end, I stopped working for that company. Ty said we had the meeting. It was supposed to be a paid 15-minute consult. We kind of hit it off a little bit. He was intrigued by the CRM that I was building for the client at the time, and he thought I could be helpful in-house. And he said, "I'm going to be in LA tomorrow. Do you want to meet me at a business dinner or something like that?" And so I met him at his office. We got in his car. We sat in his car in Beverly Hills traffic for like 2 hours. He's talking the whole time. I can't get a word. And if you know Ty, you'll know exactly what I talk about. He doesn't. He's an unbelieving yap for hours. And we got to his appointment, and I'm like, "Where are we going? Who are we meeting in this business?" He goes, "Oh, it's actually my dentist's office. Just come and sit with me while I'm in the appointment." So I sat with Ty and watched him get his like dental appointment or whatever, and we're talking. So ended up working with Ty for about a year. And then that spun off into like a lot of good connections into the internet marketing info agency. And then I was really fortunate in, beginning of 2025, met Dan Bilzerian's marketing team and was originally hired to be as a marketer. And then he actually asked me to publish and run that entire info business that he has for right now. So that's kind of the last 7 years of my life, kind of the short story. So I have, mediabuyer.com, marketer in-house of the investment fund, Ty, and then kind of Dan and, 40, 50, hundreds of campaigns in between all those and a bunch of different businesses, mainly in the info space, but also a lot of coaching, consulting, done a lot in SaaS and a lot in financial services, insurance, recruiting, kind of been, so yeah. And then managed spend across, Google, Meta, LinkedIn, TikTok. Spent a lot on all those platforms over the years.
That's fire. That's fire. I'm very curious about the financial investment company. When you were running ads for them, what were those ads like? What was that targeting like? Because obviously you're going for a very affluent demographic there. And I think it'll be interesting for those that are watching, basically, if they're targeting richer people. I know Jeremy talks about this as well as, going for those richer people. How did you do that? What was working? What was not working to attract that kind of ICP?
That it was really interesting, right? Like if you look at like the investor lead generation space, you have three tiers, right? You have non-accredited people making, less than $1 million in investable assets. You have accredited, kind of that north of $1 million investable assets. And then you have a qualified purchaser, which is north of a $5 million net worth. So that firm, it was really unique. It was only about 400 or 500 clients the first year that I was there. They had $25 billion under management, very affluent person. The median account size was like $20 million invested liquid. We knew that we weren't probably going to get that level of criteria on the average lead, but they had started kind of lowering the bar. They wanted to go after that $1 to $5 million sleeve of investors. And they had a division and a clientele base to support that demographic there. So when we launched the campaigns, we just did kind of basic call funnels, webinars, lead forms, and stuff like that with kind of all the best practices in terms of like pixel conditioning to make sure the algorithms is going after those people. It was actually, I would say probably like by the 6 month mark, we kind of found our hook, which was the alternative investments platform. If you're kind of when you're selling a unique or a new opportunity, Russell Brunson always talks about that. You get a disproportionately higher response rate than if you're kind of marketing for like more generalized financial services, stuff like that, like investment advisors. Like the demand for that service is going down among millennials who are exposed to ChatGPT and self-advisors and index funds where they feel like they can self-manage on their own. But we had a very awesome proprietary set of funds that our investors got access to at discounted fees, lower minimums in private real estate, private credit, and stuff like that. And that was our value add and the justification for charging, 1% of, assets under management. And it was an amazing company. And so we found that angle and that really resonated and that started a lot of conversations. So we kind of alleviated the lead gen constraint pretty early on. If you run an agency for long enough, you know that it's usually if you're running lead gen, the constraint becomes, unless you're working with big companies, is them figuring out their sales process. It's like more than the lead gen. Much easier to manage bits and computer, atoms than it is human beings. So I'd say it was a few months to kind of find that constraint and find our winning messaging. Then we kind of had to refine the SDR function that I was kind of in charge of in making sure those investors and those advisors were showing up towards their appointments. And then we had to find the sales constraint. And that was difficult because that's a business, it's a super high trust sale. Minimum account size is about $500,000 to $1 million. So lubricating, if you want to use a term or something, or compressing that sales cycle is difficult. The way that where we started having the most success is when we ran local campaigns. was actually running local campaigns where we'd have the ability to shake hands with people. We felt like that was the needed, necessary touch point to push them over the finish line and feel comfortable enough transferring over, $1 million when they didn't have a trusted intermediary. So it was pretty challenging. The behemoth that we were competing against or trying to model was a company called Fisher Investments. If you look up Ken Fisher, it's pretty amazing. Like I looked at this guy's landing page and his business model. I'm like, I bet you this guy's a multi-billionaire just because you could tell in 3 seconds if you look at their ads library how sophisticated they were from a marketing standpoint. And then I immediately checked my phone and I had 14 missed calls and 3 minutes of opting in from their setter team with like perfect, phone deliverability, no spam markings, anything like that. So I'm like, okay, they have an outbound team, a dialing team, really slick paid advertising. And then you have a back end and you have a business model where there's no other really business model in the world where you get exponentially more fees year over year than you did prior. So I looked at their website. They have like $200 billion under management, and he's worth like $7 billion. So it's like kind of combining direct response with this like amazing business model. And their model was, phone floors of outbound phone people to dial the new outbounds, targeting that retiree sleeve of like 200K to 500K, like a little bit more retail than we were going. And then they had in-person sales teams that would drive out to you, meet you, and close you on that in-person sale. So we kind of had to figure all that out on our own, but that was kind of the model and the landscape and some of the other competitors, if that's
Yeah.
helpful.
100%. Yeah, it's definitely a lot more of a complex funnel. There are a lot of moving pieces, a lot of moving parts where, like you were saying, you got to compress that sales process too, and that takes a lot of iteration for sure. I'm curious to go into, your work with Tai as well. Very interesting with how you met and that process of like getting started. But what was it like working with him? Yeah, what kind of offers were you running? What was that process like?
Yeah, so I wasn't with Ty for too long. It was about 1 year that we were engaged and we were doing stuff together. The offers that he had running at that time, this was in 2023. The offers that he had running at the time was we had a biz op that was pretty successful, spending about 15 grand a day. A low ticket, that was a really amazing project. There was the high ticket like B2B consulting offer that was like 20, 30, 50, $100,000, do some private consulting with him. And then there was a lot of events that we were running. So I was mainly doing some of the high ticket. I was doing a little bit of everything. The thing that we were having the most success on was we had a low ticket biz op offer for like 297 direct to cart. And for all the marketers out there, as we were doing about a 1.3, 1.5x return on the front end, spending $15,000 a day, and it grew to that point in 90 days. And we were targeting the entire world. That was before they even spoke to the sales team. We never quite cracked the ascension on the back end, but that funnel was getting really good economics. And then the call funnel that we were running to go after Ty some of his warmer audiences to do one-on-one consulting with him, that was profitable too. That was, 2 to 4x, spending a decent amount every day. And we were kind of selling at an average package price of 10, 20, 30, 50, even a couple like $100,000 units. He would sell those on the back end of his events business. So those were kind of like the three core offers that we were running there. Ty is very adamant about no all proprietary tech and software tools. Like that was one of the things candidly that drove me insane. Is like I would be like, oh Ty, we gotta use Calendly, we gotta use Close.com, we gotta use Pixie Dialer or some of these tools that you'd use. And you say, oh, we'll build that out in house. You know what I mean? And that was kind of a little bit kind of what ultimately in the end, just a different vision at the end. It was just I didn't think we were subsidized enough to have the development to make these out of the box tools that we could have just bought for 270. So I felt like that was a constraint on the company and ultimately why I was kind of starting my eye was starting to wander after the end of that. But he's a very smart guy, unbelievably smart. Starts a lot of different businesses, probably takes on a lot of different projects. But he was kind to me. He was always helpful to me and helped all the clients. And I felt like the products that we were selling at the time were helping and helping people. And then kind of I just almost like 6 to 9 months ago, obviously he had a little bit of the issues come up with. So I don't know what's going on there. I haven't read into that too much yet. If it's just, but that was my experience. It was kind of short-winded. It wasn't super long, but I enjoyed it. I learned a lot. He's very, very well read and he has good judgment and good discernment and standing over his shoulder every day, as his marketer and seeing what variables he's choosing to split test, how he's looking for outliers, what he deems as statistically significant. Just overall, I think that was like one of the biggest takeaways I got is as a media buyer, I spent years of my career getting too granular of split testing certain variables, and he was looking for huge, massive outliers. Like he would launch 40, 50, 60 massively different products, different products, different angle, like completely different stuff, and then find the outlier and then iterate from there. So it's like this very fine balance of like experimentation versus iteration, and it's like having the judgment to say like, if it's not working at a few $100s a day, it might make sense to do a complete 180 or complete pivot, and validating certain demand or a certain angle makes sense before you invest the 6 months into iterating, which typically is going to be, there might be diminishing returns from that point. So he had an immaculate judgment and like eye from the market to be able to kind of predict what those variables were going to resonate with the market, when to pivot, when not to, how to think about statistical significance. And I learned a lot during that period. It was amazing. And then you couple that with the fact that he's running live in-person events and the best marketers in the world. Every single week, he's throwing a live in-person event, getting to spend time with those guys and see what's working there. It was a pretty fun year. He was just taking on a little bit. That thing of like Keith Cunningham, the road less traveled or the road less stupid he talks about is
Yeah.
just like most businesses die from indigestion. That was the only, and I don't even think Ty would disagree with that. I don't think that I'm talking bad or anything, but I think he was taking on a lot of projects really quickly and publishing people and having lunch with people and promoting their. But it was a lot of different. I felt like we were spread a little bit too thin. And I actually am a little bit more of an operator standpoint. Like that's my person. I like iterating, obsessing over things. I kind of wanted to just iterate and focus on a couple key, profit drivers and revenue lines. And I felt like we were taking on a lot of different stuff. There were some SaaS plays, there were some, partnerships, there were some affiliate plays. So that was my experience from it. But yeah, really, really smart guy. Probably the most fun guy to get dinner with that I could ever. He's like unbelievably intelligent, and I think that's kind of a blessing and a curse because when you're that intelligent, I think you're constantly craving new, novel stimulus and like mental challenge. And businesses just don't manifest at that level of speed. It's like sometimes like the advice my mentors give me is like, yeah, you're just gonna hire 10 times more salespeople and do more outbound calls and drill speed to lead and drill the script more. It's just mind-numbing, boring work for the whole next quarter. And that how I don't think he wasn't that type of personality that wanted to go through that. I don't know that
Yeah,
those boring phase. He wanted to find other operators that would do that.
for sure. How many was he like? How many offers or different services, whatever, that he was launching per year? Was it like once a month he was launching something new, or was
I would
it
say I'd say
order?
it was dozens. Like we were like
Crazy.
dozens. Yeah. So it was he had a lot of different partnerships and worked with a lot of different marketers and stuff like that. There's something to be said for that, I think. But once you do have a couple of those outliers, and I felt like we did have those, I felt like we were lacking that one operator that was going to see that through the finish line for the next
Yeah.
12, 24, 36 months.
Sure. Sure. Yeah. No, that's very interesting. And then how did you get into working with Dan and then obviously kind of running the operations for him?
So I have a good friend out here in LA, Logan Forsyth, who runs, shout out to Logan. He runs media scaling and they do short form management for sub accounts.
Hmm.
And I was the media buyer for Ty, and he was running Ty's short form. So he created, 65 different accounts. There's like Ty, best moments of Ty, Ty wisdom, whatever. Eric best, like you could take any talking head, create all their sub accounts, different variations of their name, post 1,000 times a week, etc. And it was great for top of funnel awareness. So we were working together and talking a little bit. We met at the conference, shook hands, didn't really think anything of it other than he was just a nice guy and we were going to stay in touch. He lives out here in LA with me as a beautiful family and wife and kids, etc. So we were just staying in touch, keeping in touch together on Instagram. He started engaging with Dan and mentioned, hey, if you're looking for a marketer, I recommend Sam. I think I had 4, 5, 6 meetings or interviews rather with his marketing team. Eventually, the last one was with him. He had his shirt off and he was kind of walking around the pool and told him about my background and told him I was doing accredited investor lead generation mainly and working with Ty, and I'd worked on 50, 100 other businesses as well too. And they said, okay, we want you to be the media buyer and the marketer. And they had a management team for their info businesses that I would say within 3 weeks of being there, I kind of found that they just weren't doing a great job of running the business in full transparency. And they kind of knew that and they kind of brought me in. And it was unfortunate. I was on a meeting with that former management company and Dan, and I was sitting there as the media buyer for my first couple of weeks. And they're like, oh, we spent, X amount of money, $50,000 on ads last month. And I was like, hey, it's not my place. I went to one of his team there, but I was like, but you spent significantly more than that. There's discrepancies in the data and things are getting messy there. And I ultimately said, look, this is how I'd run the company. If you were to do it, this probably needs to change, et cetera. And they were like, well, do you want to run it in the interim while we find somebody else? And that was 18 months ago. And we saw a lot of growth during that 18-month period. So it kind of just progressively came from I was kind of at the right place at the right time, just them wanting to change at the management position and me being already kind of established there as the marketer reporting to that team. I kind of just picked up and kind of picked up what they were already doing and just kind of fully published it, so to speak. So that was kind of pretty much fully gutting the company. So that was, removing the sales team, removing the sales management, hiring new reps, setters, reconfiguring the CRM, rewriting all the copy, the scripts, all the economics. We're kind of not really firing like they should be, on the funnel that they had. So we tested a few funnels, high ticket and low ticket. Ultimately, low ticket worked the best for us with a dating offer and yeah, fixing their attribution, their performance reporting and stuff like that. So yeah, that was 18 months ago, and it's been a pretty fun, rewarding ride. Dan is somebody who's completely different personality from Ty, in that he is a maniacal iterator. But like he wrote his book and he rewrote it like 35 times, and he hired 5 ghostwriters and threw out all their scripts, and took him 3.5 years to put out a couple hundred pages. So he was like a maniacal kind of about product quality. And he did that in a lot of the info products, which kind of what originally attracted me to that offer. So that's kind of how we started working together. It just started off very small in scope and just gra you know grew over time gradually as confidence and trust built from both parties.
That's sick. That's sick. Yeah. What was that? Can you dive into that process of, obviously Dan already had something going when you came to him. It's not like he was starting that from zero, from what I understand. What was, you kind of mentioned this already, but again, diving into it in more detail, like going from where they were at to obviously growing. I don't know if you can share certain figures or anything, but what were you looking at? What was like the initial, 90 days, or did you look at it from a 6 month standpoint? Like, how did you approach it? What were those key things that you changed that ultimately help you guys clean things up and take it to the next level?
Yeah, I can't say too much on specific numbers on that side of things, but when I came in, there was a lot of stuff that stood out, right? There was like when you launch something new with an influencer or personal brand like that, there's pent up demand. And
Mhm.
typically those are going to be the best economics that you're ever going to get from like a paid advertising standpoint, especially when you built up a brand or reputation for this like an info product. You could do a lot of things wrong and you should see really positive returns kind of in those first few months, when I was working with Onyx Singal and doing some of his masterminds and stuff like that, he says pretty much you launch something and then you get to see your true CPA like 6 months after you launch it, because there's pent up demand and there's that novelty that happens on a fresh offer. And sometimes you'll do a lot of split testing for 6, 12, 18, 24 months, and you'll get marginal incremental improvements on the funnel, but your overall economics stay the same as when you launched it. And that's because you're combating that gradual offer fatigue phenomenon. Like there's an atrophy that you're offsetting. So they had launched and their economics were just okay, I would say. They're doing great organically, obviously, but the cold stuff was kind of doing just okay. And they were kind of, I didn't think they really knew their identity, right? Like if you zoom out and you look at the info landscape, right? You have low ticket, mid ticket, and high ticket, right? And if you zoom out, like low ticket, it's like probably less than 297. They're going to directly transact on site, right? And that's a whole language, and that's a great model. And then you have mid ticket, you have the webinar presentation where you can pitch 1 to 3K mass market without a sales team. And then you have high ticket call funnels like north of 3K, where you're selling in a one-to-one consultative nature there. So they were kind of skewed in between low and mid ticket, and there's radically different ways that you run those businesses. So like if you run a true low ticket funnel, like I was talking to marketers at Dr. Pompa, last week, is like they do $100 million a year. They sell a test kit, that transitions perfect. It segues into the high ticket because the test kit identifies all the high ticket, the problems that the high ticket program solve. In info, it's very common people will try and do a low ticket. They'll get good economics on the front end because it's a novel, new, unique offer, but it cannibalizes high ticket because there's not that clear delineation there. Like it has to be a very narrow problem to a fraction of the problems that they experience. So the mid ticket funnel that they were kind of running, it was like mid low ticket. It's like it didn't have like the insane economics of high ticket, you know what I mean? But it also didn't have it was like too high of a purchase price and it was giving up too much of the program, the course, the materials, and the modules there to where if your low ticket program starts to become never ending and a large amount of content consumption, 20, 30, 40 hours or something like that, people will get lost in that and they'll lose their momentum into the ascension. Like the
Mhm.
best low tickets that I've ever seen were like this 7 day thing because it's
Yeah.
narrow to find people can go through that. Like us as entrepreneurs, I think we see, oh, there's 40 hours of content. I'll get through that in a weekend. Like it's kind of in our nature, but you're selling to a consumer, it just kind of leads to a lot of overwhelm. So they kind of had a blend of like these different funnels and these different pricing, and there wasn't like a delineated sales process that was clearly distinct, differentiated, and unique from the mid ticket that was the original pitch.
Yeah.
So it was interesting. Like if you started at the mid ticket price, we tested a mid ticket, live webinar. Dan didn't really want to pitch a lot, like because it wasn't his brand. Like if you look at everything and the content he puts out, it's all very candid. So ultimately, the webinar wasn't super viable. We thought about bringing on a third other person that was going to help him do the pitch. Actually, like a very famous person in the webinar space to kind of do some of the selling and him kind of appearing as the face a little bit, but
Mhm.
that ultimately didn't have that great economics. We went to a call funnel on the high ticket side of things, and that ran pretty well for about 12 to 14 months.
Mhm.
And then it became more difficult after Andromeda. Like the algorithm shifted a lot, and then we ultimately shifted back to low ticket, which ended up becoming like the most important shift that we made at the company.
Yeah.
Was influenced by we were paying a ton. I still pay new advisors every single week or whatever, and we were going back and forth with a lot of people, but certain offers, just based on the nature of them, self-select for people that are doing poorly from a financial standpoint, and dating is one of those examples. To where if you're struggling with dating, unlikely that you're gonna have a lot of. So having that required event of them making a purchase helps the algorithm optimize around dollars instead of the cheapest lead possible, basically, because that's what it's trying to do, is trying to find the cheapest lead. And we
Mhm.
would just get crazy volatility swings with the call funnel. But so that's kind of been the evolution of the model kind of over the last 12 to 18 months. It's incredible because when you are running a low ticket campaign and you're running a purchase optimized event, it's like right now Meta, all the biggest spenders on Meta are predominantly e-com. So they have more data on the purchase event than any other metric on the platform.
Yeah.
Not all leads are created equally, but all dollars are created equally. So the algorithm thinks in terms of ones and zeros and dollars. It does not understand that lead was qualified, that lead doesn't. There's some tools now that help that, and there's some offers and niches that you have to do a call funnel. But at a certain level of scale, there's a level of entropy, and you're competing against colder and colder buckets of traffic, and you start to have these huge volatility swings where Meta is kind of unencumbered, it's never getting that feedback on dollars and revenue in. But when you have a very, very narrow, like low ticket product, it gives it immediately a clear signal back to the algorithm, and it never kind of really deviates from that pocket of traffic that's a true buyer, which is really interesting. Now, it does create problems on the sales side of things. It's way harder to have a proper sales process coming from low ticket. It just has to be very, very differently defined from your high ticket. Like for 99% of beginners, people listening this year, call funnel is going to be the best place for you to start because it's sub 100 to 3, $400 a day. You can have fantastic economics and do it 2, 3, 4, 5x, but you're dealing with the highest quality amount of traffic, right? Like that's one of the beautiful things about paid advertising is sub $1,000 a day. There's actually an incentive. It's very democratized, and that you're getting better economics than Athletic Greens who's spending $300,000 a day. They have to be perfect to spend $300,000 a day. And you have to be better to spend $1 million a day than you would at $300,000 a day. But after a certain point, Ryan Clogg is a really good friend who's talked a lot about this, is, $500,000 a month to $1 million a month. the call funnel starts to degrade a little bit in some consumer audiences. If you have great economics, keep scaling by all means, but it sometimes fluctuates and starts to have all these kind of wild volatility swings. But cracking a low ticket is amazing because it's a very low stress way of running your business. Like info by its nature is a very stressful business because you have no revenue retention. It's like huge dopamine swings. You do 1 million a month, and you do 350 the next month and 650, and not a lot of repeat customers there. But the beauty thing about low ticket is you're recouping 70, 80, 90% of your spend save day. So your cortisol goes way down. You're much less stressed. You see a good deal that revenue being recouped day one. And then you have to have a really good setter team and closing team that's going to delineate and hopefully have a low ticket that actually exposes the problems to the high ticket. But there's a lot of different variations of the low ticket. You have to make an amazing sales page. You have to CRO and split test every single page and headline, etc. It has to be designed beautifully. So we tested about a dozen different variations over the last 16 weeks and ultimately have something it does about 75 units a day right now, 70, 80 units a day at a pretty good ascension rate there. So that's a long-winded answer, but that's kind of been the last evolution over the last 12 months of working on it.
Far. I have a quick question for you, just because you've been in the space for a super long time. I think this would be a curious question for a lot of our audience. A lot of people say info is kind of like starting to die down. It doesn't really have much of a future just from a macro scale. What would you say? What is your take on that? Do you think info is kind of dying out? Do you think this is just the beginning? Where do you kind of see the whole space heading in the next 5-10 years from now with other tools coming out like AI, et cetera?
So I think if you saw like Cole Gordon's most recent podcast with like Ryan Clogg and Spencer Van, is like it's difficult now like to be super profitable just selling a course, because there's not as much perceived information asymmetry as there was 5 years ago. Now with everybody trying to model Alex Hormozi, you have people putting out their entire you have people just giving away your entire program for free on YouTube, et cetera, for free content. It's kind of a race a little bit to the bottom, and the coursing is becoming a little bit more commoditized. And I think AI is kind of accentuating that faster, right? So that's one force. But then you also have, like on the other hand, you have Alex Hormozi, who's talking about his whole investment thesis into school is that you have the information, like the alternative education space, course guru, e-learning, that is growing, and the standard education system is dying because it's still a way better trade to spend $6,000 on somebody who's in your niche making money in it right now than getting a degree for $100,000. So I think there's a lot of other factors that come into play for it. It comes into like how big is the information asymmetry? How sophisticated is the market on that particular topic? Like a good example is like drop shipping, right? Like 6, 7, 8 years ago, drop shipping offers were doing really well. And now it seems like the arbitrage there isn't really there anymore from a media buying standpoint. The ads are too expensive. You probably have to build a brand and build a real e-commerce brand to succeed there. But there's also just less perceived information asymmetry in that space now because there's public materials on that business model for the last 20 years. But I still have 20 friends and colleagues that I can recite right now to you that are doing $1 million a month on an e-com or a info offer. Now what's interesting is you have 3 buckets of info offers. You have wealth, health, and you have relationships. Health and relationships typically have longer shelf lives in terms of their sustainability because that's the biz ops stuff grows faster. Like you saw the Amazon FBA guys do like Jason Flagin, right? Did like $100 million in that year during the rise of Amazon. Now it's a little bit harder because there's not that big tailwind propelled behind it anymore of this new emerging platform. And there's perceived as less asymmetry between the consumer and the business owner. So I think at the course level, just pure info, that's becoming a little bit more difficult in some niches. I don't think it's as dramatic as everybody's talked about. I think that the marketplace is more sophisticated. They know what a high ticket sales call is. They know what an application grading system is. They know how to enter in their details differently to get paired with certain closers. They know that you're not really going to pitch them. Like the price that you're showing them now is not just a one-time special, only if you stay on the call. So there's like a lot of I don't want to call them tricks, but marketing tactics that worked 5, 6 years ago. The market is too aware now to know. But there's also a lot of markets where the market is still unsophisticated. Like if you're selling to boomers right now, like 60 plus demographic, a lot of money right now, a lot of that stuff still does work really well because they're not privy to those same marketing tactics. But What Cole's a little bit more biased on and Spencer is more service than info. I don't think that's going away anytime soon. I think there's always going to be people that are in the field that you're doing right now who have, even if the LLMs can scrape the entire internet from all the data, Google's been around forever. It still requires human judgment and prompting to kind of know which data set that was pulled from and be able to call bullshit on those things. Even if the output is a little bit more narrow now with an LLM than you're getting with Google, yes, I think you're still going to have human judgment. I think you're always, for the rest of time, human beings are always going to sell information, and there's going to be a segment of the population that has more context on one particular domain is going to sell that to another domain. So it just depends. I think another, like everybody's referring to it as the trust recession right now. I think another thing that's contributing to that, the challenges that people are having in info, because candidly, it is a lot harder now than it was 4 or 5 years ago when there was a bigger arbitrage on the ad costs were lower and the conversion rates were higher, is you have this crazy K-shaped economy to where the rich have gotten richer and the poor have gotten poor. Like I don't want to get political or whatever on this podcast, but one of the most hideous, sad, disgusting things the government ever does, they print all this money and you create, all that infinite cash flow starts chasing fixed assets, and you have the boomers getting richer than ever. You have the consumers getting squeezed, and you have offers that serve the bottom end of the demographic, people struggling. Those are doing really well. And then you have the like offers serving the boomers or the people that had assets prior to 2020, they're doing exponentially better. So and then you have the people that are kind of stuck in the middle, the offers serving those people like 100 to 300K a year, 50K to maybe like 300K a year. I would say that's like a prime candidate for somebody who wants business, health coaching, relationship coaching. Like that middle of the market is a tough place to be in right now, because that consumer is just getting squeezed right now, and their dollars are not purchasing the same amount of goods and services as they did 5, 6, 7 years ago. And the info marketing industry as a whole is getting kind of leveraged right now. Is that like now for those offers to work and be viable at that 50 to 300K segment, you need third party financing. You know what I mean? Which is something that wasn't existing 5, 6, 7 years ago. Like you talk to 90% of the people in BizOp and the economics of their funnel wouldn't work. They're financing 80, 90% of their deals, which I don't ethically have a problem with as long as it's, good deliverer, good operator there, because it's nothing compared to what the standard education system's done to us in terms of trapping people in debt. But yeah, it's so to answer your question, Tom, there's three variables. There's like the macroeconomics, there's like where the liquidity is flowing is directly correlated to how viable the info offer is. Then there's like the information asymmetry of the offer that you're targeting. And then it's kind of where your offer is positioned. You know what I mean? So it's kind of like skating to where the puck is almost. And a lot of the people that were doing so well in BizOp from 2021, 2022, 2023 thought they were this amazing operator. And it turns out it was because they just had an arbitrage, you know what I mean, that existed at that period of time. And that was fueled by all the money and the liquidity being pumped around to consumers during COVID, that they were kind of idle and sitting at the house and open to taking up new business opportunities. And then you had a market that was more subsidized with more dollars, and they were very sensitive to marketing tactics and, high pressure sales calls. And now they want to sample before, like it used to like Hermosi said this on a podcast, I think a couple of weeks ago. It's like you used to be able to run an ad, get somebody to pull a trigger on a call funnel for 10 grand. And all the offers that I was running from 2020 to 2024 were like high ticket call funnels. It's kind of like that was like my bread and butter. And now it's shifted to, we go back to the beginning of the podcast, is mid ticket and low ticket first. And I view those as like the ideal conversion mechanisms for a sophisticated, skeptical marketplace, because they either get to sample the presentation in terms of mid ticket before buying, or they sample the low ticket product for a transaction. So it's that's kind of where I think that you can still do well if the market that you have has purchasing power and buying power. If you're positioned uniquely, I think you can still do well right now. It's like the people that are crushing it is the people that I know are doing really well is like on the real estate side, they're teaching co-living, because I don't know, like right now with how sad it is, it's the broke the consumers are. The fastest rising trend right now on the consumer side of things is how fast renting of single rooms are and split. It's called like split room or something like that. Like that's the fastest growing SaaS right now. And then you have on the other end of the spectrum, you have people like Superhuman, who do $50 million a year, and they do very like affluent $20,000 packages towards that boomer demographic or the people that have the assets. But it's like the people that are getting caught in the middle, it's got to be a pretty compelling, it's got to be a pretty compelling offer, to have that differentiation.
Yeah. How are you leveraging, and by the way, thank you for that. That was a solid answer. I think that's probably one of the most solid answers that we've gotten to that question because we've asked that a few times. And so definitely gives a lot more insight and context to people. So I appreciate that. But how are you leveraging AI in, what you're doing with Dan and just your work overall, maybe with other accounts too? Like what has that looked like? I feel like there's something new that pops up every month or two. So what has been consistent? What has actually like not just been like, hey, we're using AI, but something that has actually generated extra revenue for you or saved a lot more costs for you. Very curious to hear about that.
Yeah. I mean, the media buying is like, as marketers, like the targeting's already been so AI assisted since like 2020. I wasn't that blown away by ChatGPT. I'm like, whatever, you just made a language model, in 2020. But like we were already using AI for the targeting, which I thought was like more interesting of a use case like 5 years ago. So then the LLM came out, but the copy really sucked. And then in the last 12 months, the copy that it's made has become like immaculate and like really good. So obviously, like all the copy, I still think you need to have human judgment and prompting to be able to know what good copy is and tweak it and adjust it to make it look good and not look like AI copy. So copy that's not groundbreaking. Static creative production right now is huge. So basically, a lot of people have been struggling since Andromeda got rolled out in July of 2025. Like there's just a lot of accounts and stuff like that right around that time that just went just took a nosedive, and it increased the frequency or the acceleration of ad fatigue of where people are right now. And what's interesting is like Subri Sandal, the guy who runs a huge King Kong marketing agency in Australia, he's talked about this. Is like even my full-time creative department making like hundreds of video ads, it's struggling to keep up with just how fast this freaking machine demands creatives. And so what's really working right now to keep up with the algorithm rate is static production. And you can actually do that with AI, and you can actually do that economically. And I think there's like 4 or 5 slots that are viable for an image ad placement over a video ad placement. So you always got cheaper placements, typically lower lead costs. But that's a huge arbitrage opportunity right now. Is with AI, most accounts you could probably go into and just triple the amount of statics that you're currently producing. And I think you're going to generate a lot of alpha and add a lot of value to the accounts you have right now. On the video side of things, the video gen side of things, you better be dealing with probably a less sophisticated audience that can't see the nuances of an AI generated avatar. So boomers, consumers, e-com, I think UGC, I think you can do really well there, but it's still kind of iffy. I don't think it's going to do full like long form. Like I don't think it could manage a faceless YouTube channel right now and do really well on that. But and then the other thing that's been crazy, I think recently, has been the AI funnel building,
Hmm.
which is crazy. It's like allowed me to, especially now, like a lot of the stuff that I just do consulting for and stuff, it's all low ticket now with the very skeptical market that we have and this need to repay back advertising costs faster. I get a lot of people that want me to consult on that side of things there. Having these AI funnel builders that quickly kind of ideate and rapid through there, I don't think there's really a need right now for a ton of web designers. As sad as that is, as somebody who employs a lot of web designers, I think that's pretty much gone now. So I'm not worried really about the Cole Gordon did a whole podcast with Matt Ryder, where I think he really talks about the risks of AI on the sales side of things.
Hmm.
I'm not worried about that replacing at all. Maybe the STR side of things a little bit. Obviously, you guys on the DM side of things, that's a huge use case, tons of value to be added there. And most of the people that I talk to are heavily leveraging AI to assist the DM setting. But I think it's pretty. I think content sales, that's still going to have a long ways to go before that. I don't think it'll ever personally, do some of these more complex sales like that, but it's doing so much now. And I'm able to do 50 times the work that I was able to do 12 months ago. And I feel privileged that I'm kind of in that spot where I've had enough judgment to be able to utilize the tools enough right now, because
Yeah.
but it's, I have a lot of people that come to me and they say, well, I'm just going to use AI. And I'm like, well, good luck, because it's going to really lack a lot of judgment. You're not even prompting it correctly. You know what I mean? You kind of lack a lot of the context there. So I don't know. Maybe it'll change that over the next few months. It's getting close to the point of it's just you just telling Meta what your offer is and click play and it'll generate,
Yeah.
leads on demand for you. But it's yeah, there's I'm testing new stuff all the time. The tool that I really like now, shout out to is Manus.
Nice.
I think Manus is insane what it does for productivity right now for me. Like it allows
Yeah.
4, 5, 6 agents that are one's writing an email flow, one's making static images, one's reviewing 25,000 hours of sales call recordings right now and spitting out the next VSL iteration that has all their objections in equal proportions at the VSL length. I mean, it's crazy. It's fun because everything I'm doing now is very creative and I don't have to do a lot of the mundane stuff anymore.
100%. 100%. What other tools are you using? So you mentioned Manus, but to get granular, get specific, like what else are you using, even for whether it's image generation, unless it's literally just Manus, but that, and then when it comes to like funnel building, all those different kind of things, what else has been pretty helpful for more than just like, oh, this was nice to test for like 2 or 3 weeks, but months?
Yeah, so Manus is great for the funnel building, even the web hosting on there. Then you have the image generation. I do a lot of that with Manus now, but you can use Nano Banana. Higgsfield is probably the best plugin I think for right now for the AI avatars. And if you can't, pro tip is if you can't crack an AI avatar that's converting well in the whole ad is you can just make the hooks and sometimes squeeze more life out of the winners that you have filmed by a
Yep.
human. So that Higgsfield's a really, really good right now. ArcStat is really good. What was the other one that there's one that's that I was going to mention that's been great. I'm blanking on it right now. It'll come back to me in a second, but yeah, I don't know. I remember now. It came to me. Poppy AI is pretty
Okay.
good. Poppy AI is awesome too. Just being able to plug in all those different data inputs to make the batch of copy and what influences the LLM to prompt, like that's a game changer. You talk to a lot of the big marketers and people like Josh Gavin and stuff, they rely on that heavily. But nothing
Yeah.
too crazy of what you've probably heard, what you've not already heard of aside from Manus. And then Claude's obviously great too. That's an important one. So
Yeah. That's fire. Yeah. We just got Mythos back today too. So it's a good day.
yep, yep, exactly. Yeah.
Love it. Tom, you got anything else before we wrap up? I feel like this has been super helpful. We'll definitely need a part two in person sometime, but yeah, anything else you got, Tom?
No, no, it's been great. Thank you so much for all your insight and your expertise and your experience. And I think this will be super valuable for our audience.
Appreciate it, guys. Yeah, I really enjoyed it, and likewise, I want to learn a lot more about you guys. This is weird for me because I'm normally like to actually listen a little bit more when I meet great entrepreneurs like yourself. But hopefully, we can do it both ways, where I can learn a little bit more about you guys, your journey, and what everything that led up to Rip Trip would be really interesting, exciting for me. So I'll see you guys when I'm in South Florida, and we'll do it again.
For sure. For sure. Where can people find you? What's the best place to get in contact if they want to get consulting or even have you manage their accounts? Plug anything you want to plug.
Appreciate it. Yeah, just DM me on Instagram at Hey Sam Sauter. And we can figure something out.
Cool. Awesome. Everything will be in the description, guys. With that being said, we'll wrap it up here and we'll catch you guys in the next one. Later.
Thanks, Eric. Have a good one, guys. Thanks, Tom. Have a good one. Bye.
Later.